Hello and welcome to the ASB Investment Podcast, the show that keeps you up to date on the markets and helps you make smart choices with your investments. These are entirely our own views and that of our guests. It's not investment advice, but we know plenty of experts at ASB that will be happy to chat if you need. Well, welcome to another episode of the ASB Investment Podcast, where we unpack the latest on investments, wealth, and the economy. I'm your host, Nigel Grant, and today we have a very special episode where we're extremely pleased to introduce a new Chief Investment Officer who will continue to shape the way we think about investment strategy here at ASB. And if you're a regular listener, you will have heard his name already, but this time the welcome is officially in his new capacity as CIO, which is what Chief Investment Officer is, funnily enough. It's welcome back to Frank Jasper. Really good to have you back on board, Frank, and in person this time. How are you?
Lovely to be in Auckland. Lovely to have a new title and be here in a slightly different capacity. So yeah, good to be here.
And I was when I was prepping for this, I was going to ask you, because we normally, how actually cold it is down there. But is it a real Auckland cold? But now, because you're in here in person, how was the flight up?
Well, it did start off cold, but no, very nice flight. Beautiful, beautiful sunrise. We live in a magic country, huh?
Oh, I've been down your way as well, and I'd never flown in before, but it is something to behold. So for our listeners who may not know, can you tell us what a CIO or a Chief Investment Officer, what's its role generally in a business like ASB?
Yeah, so the super short version is that a CIO is responsible for delivering investment performance to the firm's clients. So right from go to O, investment strategy, how you build that strategy out, how you invest the money, and how you deliver excellent risk-adjusted returns over time. I do think of it as a bigger role than just that, though, and it's investment returns for sure, but it's actually communicating really clearly what you're doing, why you're doing it, how you're thinking about the world, because that's a really important way of how you engage with clients to bring them along the investing journey and make them really part of what you're doing. And
because you've always said to me, it's not just about looking at the charts and working out sort of which way the wind's blowing. It's actually like communicating things in a simple way, right?
Yeah, absolutely, because at the core of it, we all end up making decisions with our own wealth. We want to make people feel really empowered and in control. You don't want some guy in a suit sitting there telling you what's going on. You want to feel like you've got that sort of ownership stake in what you're building and creating over time. So I think that part of the role is absolutely very, very important.
And so you've been part of the IC or the investment committee for at least a couple of years. Maybe, is it 3?
Yeah.
3 years?
Yeah, 3.
We've chatted a few times on the show before. So, but what attracted you to get, I guess to put it simply, a little bit more involved with us and the role of CIO? Are the rumours true that you just couldn't get enough of being on the podcast?
Look, Nigel, you're definitely a key part of the reason for the attractions. But podcast's not really my thing. But like, I love financial markets. I wake up every morning. I've done it for my entire life and look at what's going on overnight, trying to put that into some sort of context and make decisions around it. Getting in there and getting your hands dirty with making decisions, it's just kind of core of who I am. So we've been very lucky to be well serviced by John Smith, who's looked after our wealth for a very long time. A fantastic operator. He's retiring. That presented the opportunity for me to step into his very, very big shoes, and I'm really excited to be here.
And what's, I guess, when you come in, you move from probably, because I guess it's just kind of governance, isn't it, on IC and overseeing things to more into management or getting more involved. Do you have a kind of a vision for our investment offering? And do you envisage any changes? The okay answer may be no. Yeah,
look, I think oftentimes when people start a new role, they use that phrase, nothing's going to change.
Yeah.
But it turns out we live in this incredibly dynamic world. Markets are always changing. Economies are changing. The trends in what people do and how they invest are changing. So, look, change is going to be a constant part of what we do as an investor. So that should be expected from day one. I think we've got some long-term visions for where we want to take our strategy, but at the core of it, there's two things. One of them is we want to deliver really good risk-adjusted returns for our clients. So we're always getting the best level of return we can get for every risk we take on behalf of our clients. And the second thing is communicating what we're doing and why we're doing really, really clearly. Those things are almost kind of the foundational things. How we do those things, that'll change over time because the world changes on us. So the idea of having these kind of core values, but this operating in this very dynamic environment, that means how you execute on that might change.
And I guess, are there any areas of the business, apart from those kind of two bits, are there any other areas your immediate focus might be, or interest areas even?
Yeah, I mean, this is well off piece and probably more about the team, really. But I have been lucky enough to be in financial markets for a long time. I've worked with some very, very talented people. I'm helping develop people and talent is something that's very, very close to my heart. So I'm very lucky to be working with a team at ASB, some really good individuals. But I think I hopefully can add something to their career and value over time as well. So that part of the role, helping mentoring our guys coming through, really, really important for me personally, and a key reason why I'm quite excited about this role.
So listeners will know that you've been based down in Wanaka, I guess moved down there because you've got some very active pursuits you're into that we might have talked about in the past. But did you, I guess you were a CIO, did you feel, was any part of this, did you feel you had unfinished business? We know you're really, really into this topic like I am, and so you'd be doing it and focus on this regardless if you were in the management seat or not. But did you feel like you still wanted to, I guess, have your hands on the tools as such?
Yeah, I think, again, I'm going to look at the two parts of the role. This is never a finished job. As an investor, and I hesitate to say this, but you're always making mistakes, you're always learning things, you can always get better at what you do. So there's the professional pursuit of being a better investor all the time is something that I think is a lifetime journey. And we've got people like Warren Buffett and Charlie Munger who are still learning and still growing. Charlie Munger less so, as investors. So I think that's a lifelong passion and pursuit. I think the other unfinished business, though, and I hesitate to sound a bit sort of Boy Scoutish on this, but there will be tens of thousands, if not hundreds of thousands of Kiwis waking up. It's a Monday morning, worrying about how they put their kids through school, worrying about how they're going to afford to retire, worrying about how they're going to keep a roof over their heads. If we can help people make and feel more empowered about their financial decisions, if we can make KiwiSaver a part of their future, if we can do our bit to help contribute to their level of empowerment and comfort in their lives, that's a genuinely exciting thing to get up in the morning and for us to pursue. So I think again, that's something that as an industry we can get better at and something that I want to be part of solving. So yeah, that really excites me as well. Yeah,
I guess if you've got a scratch that you haven't been able to itch properly, you might as well,
Well, and again, you just never will. You'll never scratch that itch. It's like these are lifelong passions, right? And that's, I think, for any of the sort of younger listeners who are thinking about a career in this world, it's such a great lens to look at the world through, that you are constantly learning. So this week we're all learning about what's going on in nuclear programs in Iran and thinking about how that affects the world. It just becomes this way of looking at the world that's ever growing, ever dynamic, and you get better at it, hopefully, every single day.
Yeah, and I like the idea of, I've always enjoyed the idea that I can hopefully do it when if my mind is sharp enough, I can keep doing it when I'm retired and the rest home, as opposed to like laying carpet or slate potentially. And I guess, what else is it about wealth investments that fuels your fire? You've talked about some of the key things, but is there anything else, I guess, that looking back on your career?
Yeah, I think we've covered most of it, and it is that duality of managing money better and better. And I think that's evolving, and there's some interesting things we could touch on that in terms of how I think modern money management is changing, but how that interfaces with clients and decision making and managing sort of wealth over people's entire lifetimes. Those two things are just very exciting.
So if we talk about your investment philosophy, I guess you've said on this conversation so far, and also our previous ones, about the market and I guess the investment landscape is so dynamic, and changing and evolving. How are you currently thinking about building long-term, value, whether that's for yourself or for clients or whatever lens you want to cast it through?
Yeah, so if you think about that dynamic environment, the first question to ask is, are there ways that environment changes in ways that you can predict? And if they change it in ways that you can predict or meaningfully position for, then there's definitely a role for doing things in portfolios that we would use the word actively managed, where you are trying to get a sense of where the future's playing out and position your portfolio in anticipation of those events playing out. But at the same time, you have to come, and if there's one thing that any time in financial markets teaches you, is that it is very, very hard to do that. So you've got this idea that you've got these things, these ideas that you think that you can predict, this the way the future's going to play out, but you also know that it's quite hard to do and you could be wrong. How do you marry those two things together? And I think that's, for me, where my investment philosophy just continues to evolve, is that idea of working really hard to generate the signal about how you see the world playing out, but finding ways to express that in portfolios that manage the risk of you being wrong. And so it's building portfolios that hopefully are robust for different market environments and different kind of circumstances that generate those good risk-adjusted returns we want to get, whilst not getting too overexcited by your ability to forecast the future. And this is a tightrope that you're walking all of the time, but those things really inform how I think about investing and how I think about building portfolios.
And we talked, I think a couple of weeks ago, we talked about, and you helped us work through signal versus noise. And it sounds like, so you're positioning for what you want to identify signal rather than just the latest noise.
Absolutely.
So position for that, but also position portfolios where if that signal is slightly different, you still benefit. Is that a fair?
Yeah, and to position portfolios for the things that the unknown unknowns, I think Don Rumsfeld talked about. So sitting in a portfolio desk pre-COVID, I don't think many of us forecast a major global pandemic and the massive effects that had on individual businesses, on global macroeconomics, on government deficits. So you always have to be prepared to pivot and to have strategies in place that can protect those unlikely scenarios from playing out as well. So you're always working a bit of a balancing act between the sort of known unknowns, but also the unknown unknowns as well.
And I guess in today's kind of climate and environment with, we always talk about volatility is always around, but particularly for 25, it sort of seems as a bit more than usual. What are the biggest risks or conversely opportunities you see at the moment?
Yeah, and look, also having done this for a very long time now, it's always the riskiest time. Like it literally is. As risky as we see the world right now, there were periods of time in 2008 where it literally looked like the entire fabric of the financial system was going to fall apart.
Yeah.
I'll tell you, that felt very risky, and it frankly was at the time for certain moments of time there. But for now, it's the things like obviously the geopolitical situation, it's trade and tariffs, it's how that affects and flows through to macroeconomics, so through to inflation and to growth outcomes. So it's in many ways it is the wiring of the world that I think is the biggest challenge to sit right now. We've been very lucky to live through a period of quite benign geopolitics for a long time. Yep, there's been plenty of flare-ups, but ultimately the US was very strong. There was this global policeman. Some of that role seems to be changing, and some of the power bases around the world are changing, and those things do and will have a long-term effect on markets and economies. So I think that's something that I'm certainly very interested in right now, is how that change towards a more multipolar world plays out over time.
So to go back to just something you mentioned just before, so you obviously had your hands on the steering wheel during the GFC, and I don't want to, post-traumatic disorder bring anything up for you, but, can you give listeners a bit of what was it like to be steering capital through that? Were there any memories or moments that stand out?
Yeah, countless. It's cost me a lot of money in counselling to have this conversation with
you,
Nigel. But
look, just lie down on the couch and we'll go
the lesson from that, and there's a great quote from Lord Keynes around markets can stay rational longer than you can stay solvent. And I've read all these things, and I've read the books and read the history of financial markets, but nothing can prepare you really for the visceral emotional experience of what that's like. And the best example is I was running a stock picking Australian share portfolio at the time. So going and visiting companies, buying them, quite a concentrated strategy. I had companies that I was pretty sure were worth, let's say, I'm going to use a specific example here, was worth $2 a share. It was a retirement living company, assets in Sydney and Melbourne, bricks and mortar assets, pretty good idea of what they're worth. Maybe they fall a little bit during a GFC type situation, not a lot of debt. So it was a good, good quality, solid business. I remember buying a whole heap of additional shares for $1, thinking, wow, I've just literally bought $1 for 50 cents.
And what a go-to.
How smart am I? Down to almost 50 cents at the lows. And so you can do things that fundamentally and intellectually feel very right, but in those incredibly challenging environments can still see you lose it. And I'm going to say, quote unquote, losing a lot of money here, because the good news of that story is that if you survive, you get through it, reality returns, fundamentals do ultimately drive share prices, and quite quickly after the GFC, that company got taken over for around that $2 mark. So those shares I bought, we did make good money out of,
But
for a period of time there, you needed a very long snorkel because we were so far underwater. And so what is the takeaway from that? The takeaway from that is it's going to hurt, it's going to be painful, and it's going to test your mettle. But if you do rely on the fundamentals and take that sensible, cautious approach, you will get through the other side. Just to quickly wrap on that, what gets in the way of that? Things like leverage. So borrowing money, buying assets, even if you're really clever, time is not always your friend on that.
Because I guess with that, as soon as you've got that behind you, you almost take the decision out of your own hands.
Correct.
Whereas you can, if I've got a long enough snorkel, I can endure as long as I'm not getting investors asking me. But
so I think clear understanding of the fundamentals, manage risks like leverage really carefully, try and manage your emotions as much as possible, and you will get through those experiences. But they're hard. They really are.
And that's informed you, because at the start of the conversation, that sort of nice balance between risk and return, and ensuring where you're positioned to sort of, I guess, cater for another number of eventualities. Has that informed you?
Absolutely. I think again, one discipline to have as an investor that's really powerful, and in fact this is a discipline in life, is to evaluate events after they've happened and to take away from those events what you can learn from them, both positively and negatively. So I think it's critical as an investor not just to focus on the negative things, so what went wrong, how do I learn from that, but actually also what did I do well and what can I bake into my process going forward. And I hope that's the sort of discipline I can bring to this role, is that we sit back after things happen and really understand, okay, what drove that, what succeeded, what didn't succeed, where can we make improvements, and that idea of just constantly trying to get a little bit better at what you do, I think is a very powerful thing, both as an investor, but frankly, pretty powerful thing in life as well.
And so that's a good lesson, but are there any other things that investors, that could be someone as experienced as you, or even a saver or retail investor at home with their kiwis out, is there anything else that you find these people get wrong or overlook when it comes to investing?
Yeah, and like you mean specifically through a GFC type situation?
No, just broadly.
Just generally. Look, I think it is, and I've got to almost work both sides of the spectrum here. If you've got a broadly diversified, well-managed portfolio, you've got lots of time on your hands, you can endure quite a lot of volatility. And if you chop and change and you go from aggressive back down to conservative, back to aggressive, and try and time those big swings in markets, that's not a good recipe for compounding long-term wealth. So I think this is something that we talk about a lot, and people intellectually kind of know that that's not a good idea, but actually in the heat of things, people do tend to follow that.
Every correction's normal except the one you're in.
Correct. Yeah. So I think that's a truism on that side of things. On the flip side, there may be things that we've invested in. It may be an individual company. It may be sort of a scheme of some description where just the fundamentals aren't that good, and actually being prepared to say, I'm wrong, the fundamentals are not what I thought they were, the investment thesis has changed, I should sell this. Very important discipline as well. And again, very, very hard thing to do well, but certainly when you're investing in individual securities, a very important discipline to manage.
Let's press on that for a second, because I know there's a statement or a kind of like a phrase that I always go to, like, if you're a trader, neither of us are, or potentially listeners here, but don't let a trade turn into an investment.
Correct. Yep.
But I guess, that's such a hard thing to do. How do you know when it's time to exit something?
Yeah, they don't give you a playbook on this, but sure. I think, and again, this is a little bit outside the stuff that we're doing at ASB, but for anybody on the call who does invest in individual shares themselves, I think the discipline of writing down the why is really, really important. So
the why you went in.
What do I think is going to happen to this company? Yeah. How do I think this business is going to evolve? What's my story behind it? And that then provides at least a measure or a benchmark to assess current performance of the business against. So has the business sort of continued to play out with the strategy you thought it was going to play out? Is the management team the same management team that was there? Are they executing on their strategy and vision? And let's say they're in a challenging place, is the challenging place they're in is just a function of the economy or some sort of extraneous events, or have they done something themselves to make them fundamentally worth less? And so poorly time to execute merger and acquisition type deals are often an area to look for. Companies moving into new areas of business that they don't have core capability in.
Yes.
All of those fundamental reasons away from your original investment thesis can be a really good reason to look to exit something. So it is really, really hard, Nigel. This is selling. We know buying's really easy, selling's really, really hard. But those things at least help you kind of just try and create a framework for thinking about, is this a temporary thing or is this something more permanent that I should really respond to?
I like how in that whole answer it's kind of lifting someone away or shifting their gaze from the price.
Correct.
And that chart, whatever it's doing.
Correct.
And it can help.
Yeah, look, and that situation with the retirement village was a perfect example that if you looked back at what the business was doing, it was still in the retirement business, it still owned assets in really desirable parts of town, it was still welcoming new residents to its villages. The operations of the business were continuing to tick along all throughout the GFC with some subtle changes on timing and people selling their houses took a bit longer. The fundamental values of those properties were falling by a little bit, but nothing like the amount of the share price. So all of those things gave you comfort that, look, I do own something that's really valuable here and it's doing the right thing. The share price bit, quite why it was doing what it was doing. Well, that's the
I can't control that.
The animal spirits. That's the market environment. I cannot control those things. So,
okay. So continuing on the work that you've been involved with today in the last 3 years in terms of your IC or investment committee role. I guess if you were to look forward 3 years, what's 3 years? 2028. 3 years or so. What may be different or what will continue for ASB investors? With you coming on board.
Yeah, so I've got a strong vision for where I want us to be over time. And it boils down to those foundational things I talked about at the very start. So I want us to continue to deliver really strong risk-adjusted returns to our clients, to respond to market environments and to surf those waves really effectively so that our clients have enjoyed really solid returns over that time. Secondly, I want our clients to feel really engaged and empowered with the way that we've communicated with them, so they understand what we've done, why we've done it, and how we've done it, so that they feel like they're better investors in 3 years than they feel today. And thirdly, I'd love ASB and its brand to be recognised as a good investor in the marketplace and a good citizen in the New Zealand financial market. So those three things, if I can tick those boxes, I'll be very, very happy in 3 years.
Yeah, and I in our time working together, I've always liked how you're positioned. It's not just kind of the risk-adjusted returns or, that side, which is kind of the, what investors expect. It's also we almost want to leave them better equipped each time they interact with us to know, when that next drawdown happens, they've learned a bit more, they know why we've done something, so they're better prepared, so they stay invested, right?
Absolutely. Look, none of us, as I mentioned earlier on, none of us wants to be spoken at. We want to be part of something, right? And I think our job as investors is to drop the jargon, drop all the things around it, and help people feel more engaged and more empowered and more able to make decisions for themselves. And my sort of experience in financial markets has been that when people feel like that, that becomes transformational for their life, not just for their money, right? And so that's so important.
The whole teach fish versus give fish, whatever that famous saying is. Okay, last couple of questions. Let's get into the more personal stuff. So, are there any things we may not know about you? How do you spend time outside, even if that's the limited time you have outside of work? You're a bit of a adventure guru, right?
Yeah, I'm not sure, guru. And the stuff may not fit very well with the risk management framework that I've been talking about, but I do like to get on my bike and I do like to mount a bike and Wanaka boy, so I love to ski and love to trail run and live that lifestyle. Yeah, unfortunately, do fall off from time to time. So I'm nursing a bit of an injury at the moment. So as I say, I'm not sure this speaks to my risk management frameworks very, very effectively. But the multiple breaks in my arm are not a good indication.
Well, as long as the computer upstairs isn't broken, that's the part we need the most.
Always spend good money on helmets. Another piece of financial advice because it turns out they help.
and you when we were preparing for this, you mentioned that your best day for you starts at the Fed diner. When I read this, I thought it meant the Federal Reserve, but the Fed diner up and then it's up Triple Cone?
Yeah, so Fed Diner, very good cafe in Wanaka. Brona, shout out to the owner Brona on the podcast. But great coffee, some scrambled eggs, and some time to think about the the other Fed donor, the US Federal Reserve. So it's a pretty happy start to the day. And yeah, Treble Cone ski field, home to a lot of us Wanaka types. Magic piece of earth.
Oh, wonderful.
For sliding down. So no, superb.
Well, this has been great. Thanks, Frank. And I guess it's into our final question now. That's the one we ask all guests. Is there anything you've been reading, listening to, or watching that you can recommend to our listeners?
Oh, good Lord. Actually, I'm literally reading it's sort of weirdly topical given some of the military stuff that's going on, but I'm reading the autobiography of a naval aviator at the moment. And I have fallen down the rabbit hole of listening to a lot of podcasts on the military. And the thing I think I really see, albeit far more exciting parallel, is that sort of determination to get better all the time, that focus on objectives, that focus on process for achieving the things you want to achieve. And so this guy's got a great podcast, writes really well, but just a very determined individual to make things happen and to build the life for him. So yeah, it's quite a fun read. So no, some good themes in there.
I look forward to the military thematic coming through in future conversations. My one was I finally finished the book Red Notice, which is a tale of a US-born, I think, UK-based hedge fund manager who went into Russia when it opened up. Yeah. And found that Hermitage Capital it was and made all these returns, but then got basically pursued out of Russia by Putin's regime. Yep. And it is a fascinating book, and it reads like a Hollywood thriller. Yeah. So I'm glad I finally got to that because I'd been recommended on a lot of must-read lists. So it was quite the Wild West.
Sounds like a good movie. Maybe your movie career, Nigel.
Maybe. I'm not sure which part I'd play. Probably just extra. I'd play extra in the background. Very good. Well, that's it, folks. Frank, thank you for joining us again, and for the first time in your expanded capacity with us. It's been a real delight to get to know you over the past few years. Listeners will know that this area and topic is my favourite, and it's when I spend my spare time. It's what I spend my spare time reading about, listening to, and learning all I can. And when I first met Frank, I knew he was someone who'd also been caught by the same bug. He's a bit more experienced than I am, but the same bug nonetheless. So to continue the Russian theme from my book recommendation, the old proverb says, a fisherman can always spot another fisherman from afar. And I know with this fisherman, you and other ASB investors will continue to be in safe hands. So thanks again for giving up your time, Frank. It's been great to have you on the team, and we'll no doubt be seeing more of you. Thanks for coming along.
Brilliant. Thank you, Nigel.
And with that, it's until next time, happy investing, and bye for now. Thanks for listening to the ASB Investment Podcast. If you have any thoughts on this episode, or if there's anything you'd like us to discuss on a future show, get in touch with us at podcasts@asb.co.nz.